Yesterday, Nucor, the steelmaker and former accidentally high yielder, came out with what I think you have to say was pretty lousy earnings. They pre-announced numbers that nobody seemed to be happy with. So the stock opened down a couple of bucks, but then it bounced right back. And today it had a major rally, up 6.88%. No wonder we have told you to buy this stock a gazillion times every time it was down. Nucor said it expects to be just marginally profitable in the fourth quarter, while the street was expecting the company to earn $1.46 a share. I know, pretty disappointing. But those who watch Mad Money closely and listened to the interview with Nucor's great CEO knew that there was going to be a problem this quarter, so it shouldn't have been that shocking to you, and obviously wasn't to Wall Street in the end because the stock's up big. We heard about a 40% decline in volumes caused by lower demand and destocking of inventory. Nucor said it's running at just 50% capacity utilization. And although the company said it expects demand to rebound in the first quarter, there wasn't much to sing and dance about in the pre-announcement. But today, the stock is in the land of 1,000 bull dances. Now, I've liked Nucor for its accidentally high yield at lower prices. But yesterday, we heard some conflicting things about the dividend. Remember, we're focused on this show about whether your dividend is safe or not. That's the theme of the show. On the one hand, Nucor raised its regular dividend, something it's done every year since 1973, to 35 cents a quarter, which at these levels means a 3.2% yield. Given the negative pre-announcement, we would have to be a little concerned that maybe Nucor shouldn't be raising its dividend in an environment where it expects to be just marginally profitable. Could Nucor's dividend go the way of Freeport-McMoran's and vanish? Is this another Masco where the company keeps raising the dividend even though it can't be defended? I think it's neither. Why? Because Nucor also suspended its special dividend of 20 cents. Remember, that's the additional dividend they give you, a share for the quarter. This was, in fact, a stealth dividend decrease. Nucor has a history of paying out big special dividends. It's one of the reasons why we like it so much. And I think they have the right dividend strategy for a cyclical company that can't depend on earnings in a bad economy. It keeps raising the regular dividend, but cuts the special dividend as needed. This is actually the second time Nucor has stealthily cut its dividend this year. In the first quarter, Nucor raised its regular quarterly dividend from 30 to 32 cents, but cut its special dividend so that its total quarterly payout fell from 61 cents to 52 cents a share. Now, if the special dividend is going completely and the total payout is just 35 cents, we got to know, is it safe? By getting rid of the special dividend, Nucor is making sure it has a dividend that I think can be defended. It's possible that special dividend could come back next year as Nucor's earnings rebound. Also, don't forget that the steel industry is more consolidated than ever, which should prevent a major fallout in profitability for the well-run producers, and Nucor is the best run. Now let's talk to Nucor's terrific CEO, a friend of Mad Money, Dan D'Amico, to get a better sense of the quarter so far and how the company's doing. Mr. D'Amico, welcome back to Mad Money.
Glad to be back, Jim.
First, we're doing our whole show about dividends. And you just raised your dividend, even though you did cut the special dividend. You raised your dividend at the same time said that earnings aren't that good. Is that a dicey thing for our viewers to therefore buy some Nucor?
Well, I think the way that we would like people to look at it is that when you raise your core or base dividend rate, you're expressing confidence in the future. Our special bonus dividend, supplemental dividend, has been a dividend that we've had based upon a pay-performance philosophy that said when we're having excellent earnings years, we should share a little bit more with our shareholders, particularly in the environment that we had where the dividend was being taxed at a 15% rate. So our whole philosophy was just more of our share, the good times with our shareholders, not only in stock appreciation, but also in a special bonus dividend that we clearly said from day one, all right, would be there as long as our earning outlook was positive, as long as we saw positive business conditions going forward, strong business conditions. But the change in our core rate, base rate that we've made over the last several years, I mean, we're up something like 10 times since 2000.
Right.
And 3.5 times over the last 2 years. And as you mentioned, we went up 2 cents early this year, and again, we went up about 9.6% or 3%. With this announcement yesterday. The idea is we have confidence in the future, we have confidence in our cash flows, our earning power, but we ran into what everybody else has run into, and that's a scenario where we all went off the edge of a cliff with our customers' business, with the lack of credit, And how people responded to that was basically to shut off the order spigot. And we went from having a record first, second, and third quarter to a quarter where we're looking at running at 50% of capacity, still being profitable, but not anywhere near, obviously, where we have been just a quarter earlier.
Well, Dan, why do we think that there should be confidence given the fact you're at 50% capacity? Why should we think that next year capacity is going to get tighter?
Well, first thing people should focus on is that when a company is at 50% of capacity and still profitable, that is an indicator of the overall strength of the business model of the company. Secondly, the reason why the fourth quarter is as ugly as it is because order entry dropped off so fast that we had prepared for some slowdown in the fourth quarter, but nothing anywhere close to the magnitude that the whole industry here and around the world has experienced. So we were buying our scrap raw materials, which is our single largest cost factor, at a planned rate that we would run in the fourth quarter, and we have to buy our pig iron for our higher quality grades of steel out 4 to 6 months. So this stuff's coming in, it's on the ground coming in at these very high prices, and then things change overnight. So you run 50% of capacity versus what you had planned.
Got it.
And a basic scenario is it's going to take you, I'm not saying that this is what's happening exactly with us, but it's close enough.
Okay.
If you plan to run at 100% of capacity and you run at 50, it takes you twice as long to go through your inventory.
Well, you're absolutely right that it's amazing that you're going to be profitable. I remember reading about the 1929-32 period. The steel companies went to 25% of capacity from being at 100% capacity, and every one of them almost was wiped out. So it is amazing you could have a 50% decline in capacity and still be making money. Now, do you think, like I do, I've been telling people, look, if you want to play the Obama infrastructure plan, we're obviously going to need steel. And if we're going to need steel, it could be Nucor. Do you put anything like an Obama infrastructure stimulus plan in your internal numbers for 2009?
Well, at this point in time, we certainly believe that he is intent on doing a very large stimulus package next year, and a big portion of that will be infrastructure spending, and there will be a lot of steel consumed. Now, we don't think it's going to happen in the first quarter, but we do believe as we go through the second quarter that we'll start to see a lot of the projects that people wanted to go through at the federal, state, and local level, but just couldn't get the money for, didn't have the money for, were scared to death at the way the financial crisis hit. Those things will happen fairly quickly. And there's other jobs that were put on hold, hopefully, and don't forget now, the other side of this equation is not just the infrastructure issue, which we think will be a big positive, and it'll be positive out for second quarter through 18 months past the second quarter. But it's also what happens with the flow of credit. That has to happen for businesses of all types, manufacturers and what have you, to be able to get back to normal levels of running their business, where right now they're just trying to generate cash, get down their inventories, and hold on to the cash. All
right, Dan D'Amico, you are a straight shooter with us. Thank you so much for coming on Mad Money again.
My pleasure.
Thank you. You were very honest last time. You said, look, the fourth quarter is going to be hard, which is one of the reasons why I think your stock went up, because all you did was you came on the show, and then you did exactly what you said. Thank you so much for being honest and straightforward with us.
You're welcome.
All right, guys, you know I recommended this stock repeatedly at 28 to 32, repeatedly. So now it causes a problem for me to come to you and say buy it at 43. I wanted to pull back, but I've got to tell you, this is the Obama steel play. Stick with D'Amico, stick with Cramer.